Please go ahead, Mr. Day.
Thank you. Good morning, everyone. Thank you very much for participating in this annual meeting of Enablance Technologies. My name is Peter Day. I recently became chairman of Enablance this fall, and I'm delighted to be associated with the company and hopefully participate in its resurgence. Is that a future-looking statement? I better be careful. I want to introduce some of the people associated with the company. Our CEO, Tim Thorstensen, our CFO, David Toes, and Virginia Schweitzer from the Baskin Martineau law firm, who is legal counsel to Enablance. In the audience, I would like to introduce Steve Bauer, who is chair of our audit committee and has been a director of Enablance for some period of time, and John Rowland, a former partner of mine at Boser Hoskin, who joined the board at the same time as I did. I'd also like to introduce Matt Pearson, who's our chief technological officer, and we don't go very far without our auditors. We have Mike Brunia, the audit partner, and Jonathan Blackwell, senior manager from Deloitte Touche. They are Enablance auditors. I will now call to order the annual and special meeting of the shareholders of Enablance Technologies, and I'm pleased to welcome you to the meeting. At today's meeting, holders of common shares are entitled to be present and to vote. I will be acting as chair of the meeting, and Virginia will act as secretary. The appointment of scrutineers. I hereby appoint, with your consent, representatives of Computershare Investor Services, Roxanne Parceau and Florence Smith, to act as scrutineers for the meeting. I now table a statutory declaration of Computershare Investor Services, our transfer agent, certifying the due mailing of the notice calling the meeting, the management proxy circular and the form of proxy, and the audited consolidated financial statements of the corporation for the 14 months ended June 30, 2011. Has that been tabled? You've got it. Okay. I will dispense with reading the notice calling the meeting, and I direct that a copy of the statutory declaration certifying the mailing of the above-mentioned documents and copies of those documents be kept by the secretary as part of the records of the meeting. I'm advised by the secretary that there is a quorum present. As notice has been duly provided and a quorum of shareholders are present, I declare the meeting to be regularly called and properly constituted for the transaction of business. As with all things, I have to table a cautionary statement. Fortunately, Virginia is going to read it. Before we proceed, I will ask the secretary to read the customary caution with respect to forward-looking statements.
The presentation of information at this meeting may contain forward-looking statements that are made as of the date hereof and are based on current expectations, forecasts, and assumptions, which involve risks and uncertainties associated with our business and the economic environment in which the business operates. These risks and uncertainties include, but are not limited to, pricing competition, dependency on new product development, reliance on major customers, customer demand of our product and services, control on costs and expenses, international growth, general industry and market conditions, and growth rates, and general domestic and international economic conditions, including interest rate and currency exchange rate fluctuations. All such statements are made pursuant to the safe harbor provisions of and are intended to be forward-looking statements under applicable Canadian securities legislation. Any statements made during this meeting that are statements of historical facts may be deemed to be forward-looking statements. For example, the words anticipate, believe, plan, estimate, expect, intend, should, may, could, objective, and similar expressions are intended to identify forward-looking statements. By their nature, forward-looking statements require us to make assumptions and are subject to inherent risks and uncertainties. We caution you not to place undue reliance in our forward-looking statements, as a number of factors may cause actual results, conditions, actions, or events to differ materially from current expectations. Please refer to the risks set forth in the audited quarterly financial statements and related management discussion analysis available on Enablence's website or on SEDAR. Enablence does not intend and disclaims any obligation, except as required by law, to update or revise any forward-looking statements, whether as a result of new information, future events, or otherwise.
Thank you, Virginia. Now that you're all enlightened, we'll proceed. The Canada Business Corporations Act and the bylaws of the corporation entitle any shareholder to request a vote by ballot rather than a show of hands. I will ask Virginia again, the Secretary, to read the scrutineer's report on attendance and voting by proxy.
The scrutineer's report has 6 shareholders in person representing 1,649,977 shares, 150 shareholders by proxy representing 264,904,479 shares, being 156 total shareholders representing 57.13% of the issued and outstanding shares.
Thank you. The next item is the financial statements, a copy of the audited consolidated financial statements of the corporation for the 14 months ended June 30, 2011, together with the report of the auditors thereon, have been mailed to all shareholders of the corporation. Are there any questions on the financial statements? Thank you. Okay, the next item is the election of directors. In view of the need to attend to formal corporate matters, certain shareholders have volunteered to move and second resolutions where required. While this procedure will facilitate the handling of formal matters, it should not discourage any shareholder or proxy holder from speaking on any matter before the meeting. When I recognize you, please give your name and state whether you are a shareholder or proxy holder. You're going to see that we're proposing to nominate and hopefully elect 4 directors, and you're going to say, whoa, that's a pretty modest slate. But given where the company is in its evolution, we think 4 directors is the appropriate number. We've already met on a number of occasions. We will revisit the size of our board in the coming months, and we'll probably increase it by the time of the next annual meeting. There are 2 directors that are you would have been familiar with that are stepping down. One is John Ryan, who has served the company really since it was created. He was one of the original investors and has served the company in a responsible and effective way, and I want the meeting to acknowledge the contribution that John has made as a director. I've overlapped with him for a couple of meetings, and I can attest to his diligence and commitment. The other director that is not standing for election is Arvind Chatbar. He is one of the founders of the company and a technological whiz. He has had much to do. He's really been the driving force directing the company's direction over the last several years. Arvind was succeeded by Tim in 2010, and we're moving on with a new slate of directors and a new management team. But again, I'd like to acknowledge the significant contribution that Arvind has made as a founder and CEO of the company during his tenure. So with that, the next item of business is the election of directors, and I declare the meeting open for nominations for the election of directors for the ensuing year or until their successors are elected or appointed.
I nominate Tim Thorstenson, R. Stephen Bauer, Peter Day, and John Rose.
Thanks, Matt. Are there any further nominations? Nobody clamoring to be on the board? Okay. If there are no further nominations, then I declare the nominations closed, and it is now in order for someone to move and someone to second a resolution electing those nominated as directors of the corporation.
I move that the persons who have been nominated for election as directors are elected directors of the corporation for the ensuing year or until their successors are elected or appointed.
I second the motion.
Okay, I now put the motion to the meeting. All those in favor of the motion, please signify in the usual manner by raising your hand. Any contrary? I declare the motion carried. Thank you. I declare those nominated to have been elected as directors of the corporation for the ensuing year or until their successors are elected or appointed. The next item of business is the appointment of auditors for the current year and authorization for the directors to fix the auditors' remuneration. It is therefore now in order for a motion to be made appointing the auditors for the current year.
I move that Deloitte & Touche LLP, Chartered Accountants and licensed public accountants are appointed auditors of the corporation to hold office until the close of the next annual general meeting of shareholders or until their successors are appointed at such remuneration as may be fixed by the directors, and the directors are authorized to fix such remuneration.
May I have a seconder?
I second the motion.
Thank you. A motion has been made and seconded to appoint Deloitte & Touche LLP as the corporation's auditors. Is there any discussion? All those in favor of the motion, please so signify in the usual manner by raising your hand. Any contrary? I declare the motion carried. Thank you, guys. Okay, the next item is to pass a special resolution to reduce the stated capital account of the common shares in the capital of the company by $175,014,000 as more fully described in the management proxy circular. The stated capital of a class of shares is the amount paid to the corporation in consideration of the issuance of the shares of that class. In April 2011, the company announced its intention to divest its systems segment, resulting in non-recurring charges and a change in the overall business. As a result of this decision to focus on Enablance's components and subsystems business, it was determined that the stated capital account should be reduced by the amount I said to better reflect the net realizable value of the company's assets and to manage the company's capital structure going forward.
I move that the special resolution to reduce the stated capital account of the common shares in the capital of the company by $175,014,000 as more fully described in the management proxy circular be approved.
Thank you. May I have a seconder?
I second the motion.
All those in favor of the motion, please so signify in the usual manner by raising your hand. Any contrary? Thank you. I declare the motion carried. The next item of business is to pass a resolution to approve the existing Enablance Technologies amended and restated stock option plan, which is a rolling plan reserving a maximum of 10% of the issued shares from time to time as more fully described in the management proxy circular.
I move that we pass the resolution to approve the existing Enablance Technologies amended and restated stock option plan, which is a rolling plan reserving a maximum of 10% of the issued shares of the company.
May I have a seconder?
I second the motion.
Thank you. A motion has been made and seconded to pass the resolution to approve the existing Enablance Technologies amended and restated stock option plan, which is a rolling plan reserving a maximum of 10% of the issued shares of the company. Is there any discussion? I now put the motion to the meeting. Voting on this resolution will be conducted by ballot. You were handed these ballots when you registered your attendance at this meeting. Please complete the ballot by indicating a vote for or against the resolution and signing your ballot. Approval of a majority of disinterested shareholders must be cast in favor of the amendment to the Enablance amended including common shares held by directors and officers and their affiliates, they will not be permitted to vote on the resolution. The scrutineers will now collect the ballot for the option plan resolution, and I would ask everyone to hand all of your ballots to the scrutineers. Pause for a sec while we get the report of the scrutineers. So if you want to get a copy.
I do.
Or attend to any other matters, now's a good time. We will get to the business of the company at the conclusion of the meeting. Tim is going to make a presentation that will address, where we are and where we hope to go. Okay, we now have the results of the voting by ballot. With respect to the option plan resolution, the resolution has been approved by a vote of 156,008,715 common shares in favor, being 74.16% of the votes cast. I thank you for your participation, and I declare the resolution in respect of the corporation's option plan carried. Now, before we conclude, is there any other business that anybody would like to put before the meeting? You will have a chance to ask questions of Tim about the business in the course of his presentation, which will be made at the conclusion of the meeting. But if there's any other business, now's the time to raise it. Okay, if there's no other business, I will entertain a motion to conclude the meeting, and then Tim, our CEO, and Dave, our CFO, will give a presentation.
I move that the formal meeting be concluded.
May I have a seconder?
Second the motion.
All of those in favor of the motion, please signify by raising your hand. Contrary? Carried. I now declare the meeting concluded I want to thank the movers and the seconders for their excellent participation. Over to you, Mr. CEO.
All right, thank you.
I'm going to go down in the audience so I can learn more about this company.
Great. Well, we don't have a huge group, so I'm going to go through some material on the go-forward business, and our CFO, Dave's here, and our Chief Technical Officer, Matt, are here to answer any questions you have relative to our plans for building some value with the enablement business over the next year. Dave? Did you go past the safe harbor statement because Virginia already did it?
It's in here, but it's not showing up.
Okay, so I don't have to do it again. Virginia? Thank you. Some highlights from the last year, and I guess that's highlights are probably not the proper designation, but some Okay, Dave. There we go. I'll go over some highlights from the last year while Dave's trying to find them. We grew the business last year, although quite a bit of that was through acquisitions. Our plans going forward are to grow the business organically. We don't have acquisitions planned as we move the business forward. We put a focus on improving our gross margins last year, and importantly for the go-forward business, we improved the gross margins from a low of 21% to 27%. As we move forward and focus more of our revenue on our proprietary technology, I would expect our gross margins to continue to expand. First 3 quarters of last year showed very solid growth in the components business in the 30% range. In the fourth quarter of last year, and the quarter we just passed, we've seen a pause in the market. We'll talk about that as we move forward, but generally the business was experiencing fairly solid growth. During the year, we invested $3.5 million of cash in a joint venture in China. We'll talk about that in detail. That Chinese joint venture is going to have the first wafers come off the line this month, and we would expect next quarter, the January quarter, for it to start contributing to both revenue and our bottom line in a meaningful way, and demand looks strong for that business. So as we get through the year, by this time next year, it will be a significant contributor to our both top-line revenue and our EBITDA. We restructured our U.S. operations in the components business, shutting our Wilmington, Mass. site, consolidating. It used to be, it was the DuPont acquisition. We've consolidated that in Fremont, in the fab there, added 8,000 square feet. All the polymer technology is now operational in the Fremont plant, and we transferred 10 of the technical employees from Wilmington to Fremont to make that happen. As you're aware, we've initiated the divestiture of our company systems segment. The primary reason for that was, at the end of the day, we didn't see any strategic relationship between the two businesses, and the systems business was very lumpy and burned a lot of cash, and it was difficult for a company our size to fund the growth and the opportunity in both systems and components. And we made the decision that we have more proprietary technology on the component side and a better chance to succeed going forward. We sold the majority of the U.S. systems business in September to a company called Aurora Technologies. There's still a small service component of that business left, but by and large, we've divested ourselves of that business and are currently negotiating the divestiture of the teledata business in Israel, and we can talk about that and answer questions on it later. Again, the things that are challenging us right now are definitely uncertainty around the remaining systems divestiture. We'd like to exit that, conserving as much cash and assets as we can for the go-forward business. There's been a pause in the optical component marketplace, and we have some debt coming due next summer that we're going to need to renegotiate.
Are you frustrated, Dave?
Not nearly as much as I am.
That's my AV.
We're listening to you. It's very good.
There we go.
It's a great presentation.
Okay, excellent. Those were the highlights that I just went through. So Dave, can you go to the next page and don't try to adjust anything? This is fine.
Working on it.
Our focus going forward is to be a leader in components and subsystems in the planar lightwave circuitry segment. That was the original foundation of the business. We have over 400 patents in that area, and I think we have some proprietary technology that allows us to produce proprietary circuits that the world wants. So that is our focus going forward. We now have a head office here with a few folks in it, small corporate staff, a design center in Ottawa, where we plan to stay long term because of the technical talent in that area. Have been adding some staff there. We make photodiodes in Zurich, and we have a joint in our location, obviously, in Fremont, and we have our joint venture is in Foshan City, outside of Shenzhen in China. We have a very broad base of customers in the marketplace. I'm sorry, we're going to value drivers first. Obviously, the hunger for bandwidth expansion worldwide is not going to stop. So the megatrends for the market are very good long term. We're in a bit of a pause right now, but long term, the mega market that we're in is growing rapidly. We're significantly broadening our product portfolio in this year. Much of our R&D in the past has been based on doing non-recurring engineering projects for large customers. Most of those result in a product being produced at the end, and those products will start to ship in the January quarter. So we'll start to see solid revenue from the high-level non-recurring engineering projects that we've done. We can talk about the specifics, but in the major NRE project we've done, the customer has to order a minimum quantity of the product in the first year of its introduction. So that will start in January. We expect to be able to grow the company rapidly, organically. Again, we're not looking at further acquisitions as we go forward. And between Fremont, Zurich, and the joint venture in China, we have significant capacity. So we're not in a situation where, as we grow the company to $40, $50, $60 million, we're going to have to add significant capital. There's been a shift. Originally, the company's premise was that the planar lightwave circuitry technology would allow us to build products like transceivers for optical network terminals at a price cheaper than the current TOCAN technology. Our focus on PLC has shifted because our markets are starting to rely on PLCs for functionality not available elsewhere, and I won't get into that as we move forward. Some of the applications of the technology, we're competing now on functionality and performance and not just price. So I think one of the things you'll see as we move forward is a real shift in our business towards higher margin business, leveraging our proprietary technology. The overall components market is large. It was about $5 billion last year. And this is from an outside firm called Ovum. The predictions over time are for good growth in the market. We play in a very small segment of it, so we have an opportunity to expand in adjacencies across this market to grow the business going forward. The market is in a pause right now. Some of that's inventory correction. Some of it's the softness in the European market. There's been a bit of a pause in China, but in the last month we've seen orders start to strengthen a bit and pick up, and we think as we move into 2012 the market will rebound. We have a solid base of customers. One of the things we're very focused on doing is expanding beyond the traditional telecom segment. Most of these customers are systems providers for telecommunications networks. BTI Systems is an integrator for data centers, and other things. We've sold quite a bit of product to them in the last year, and we see, even in January, significant revenue coming from the Homeland Security sector. So we're trying to broaden the reach of our technology beyond just telecom so that we don't, in the future, experience the kind of downturn we're experiencing now when the telecom spending market turns down. Everybody in the industry is looking for higher speed and higher bandwidth networks with more flexibility, ability to be more dynamic. Our PLC, photonic integrated circuit technology at 100 gigabit and beyond really offers some advantages to the customers that they can't get elsewhere. I'll show you some of that as we move forward. Our focus on growing our business is as follows. First, I can't emphasize how important the Chinese joint venture is to us. I will talk about each of these areas in some detail in the rest of the presentation, but I've got it first for a reason. For the first time in 2012, our non-recurring engineering services will start to result in product revenue. Again, this should be high margin revenue. One of the things that got me attracted to Enablance initially was that major systems makers around the world were paying us significant amounts of money to do design for them. These are folks that could have got the design done anywhere else. They chose us instead. There's ongoing product revenue that comes with that. I think in one of the contracts, the minimum revenue in 12 is $2 million, and the minimum revenue in 13 is $4 million. And those are kind of floors for these, and that's just one of the projects. We'll start to see our NRE resulting in product revenue in the January quarter. We have a very solid 100 gig offering. I'm going to go through some of that. In the photodiode business, I'll talk about it, but we have just sold die in the past, and we're going to be selling packaged photodiodes to capture some of the margin that our customers are capturing. And as I mentioned, we're moving outside of defense, homeland security, out of telecom into defense, homeland security, and test and measurement as some examples. We are in the middle of a pretty significant expansion in our sales effort, which has been small to date. Relative to the Sunblunts JV, and that is the combination of Enablance and Sunsei. We didn't pay for that. We don't like the name. We came up with it ourselves. So, Sunsei is a infrastructure provider in China. So they provide telecom cabinets, cabling, connectors, and other kinds of infrastructure products to the market. Their major top four customers are China Mobile, China Telecom, China Unicom, and Ericsson. They did $100 million in revenue last year with about $12 million of EBITDA. This last quarter, they grew 40%. Which is significant. Their market cap is over $1 billion. So they're a very solid company, and they have $100 million in cash in the bank. We're buying roughly 300,000 splitters a year from Korean manufacturers in the past. We connected and decided that between our technology in splitters and their demand that we could put together a good business. So we're going to be making splitters initially for Sunsei. They will be consuming the vast majority of the capacity in the first year. Our capacity, when we're fully operational, is around 1 million splitters a year, and their demand has gone up and will be approaching that. So one of the most positive things about the joint venture is we really don't have to sell anything. We're going to be providing it to our joint venture partner. They need the demand, and we're going to split both the top line and the profitability. As we've mentioned, we expect most of the first year's capacity to be consumed by the joint venture partner. As capacity increases, we plan to sell to other customers in the splitter market. we think we can have about 25% of the total market on a run rate basis on a year out. We're also working on moving other production to the joint venture facility in Foshon City. We will be doing the packaging for our Tosa Rosa integrated circuits there also over the next few months. The picture on the left facing the screen is the building. It was a shoe factory in Foshon City. The local city decided that they wanted to move out of shoe manufacturing into optical technology. The building's been completely gutted and retrofitted. We have 40,000 square feet in the building. The picture on the next picture over is an actual picture. It's not a representation. The equipment is being installed, and Jacob Sun, our COO, was over there. I talked to him this morning. We expect to get the first wafer off the line this month. And on the far right is a picture of it, one of the splitters we will be making. We're very excited about the joint venture. We think it's going to bring a lot of value to the enabling shareholders as we move forward, and we put quite a bit of effort into it. As an aside, Foshon City will be giving us, the joint venture, a rebate on the manufacturing equipment we're installing that we should receive, the joint venture should receive in the first quarter of the next calendar year, and it will be several $1 million. So it's a very significant move for the company. As I mentioned earlier, as a validation of our technology, much of the work in Ottawa has been covered by funding from other customers. Non-recurring engineering. The chip at the bottom, Matt can explain that this is a 100 gigabit chip. We'll be shipping it to a major systems supplier starting in the January quarter. The way most of these non-recurring engineering projects work is the customer has an exclusive on the chip for the first year, and beyond the first year we can sell it broadly to the open market. We think we have 3 or 4 of these projects coming to fruition right now that are going to drive significant revenue over the next year. Relative to the proprietary nature, in the past, our most highly integrated PLCs included 4 hybrid subcomponents. We've increased this tenfold, and we can have 40 subcomponents per module. It's one of the most highly integrated PLC-based products ever developed. And we both use our lasers, which are a differentiator, and have been buying standard lasers off the market. And we have, again, I keep saying, but we have significant revenue planned for calendar year 12. This is a PLC designed for another customer that's in the WD&PON market. It reduces the size of their optics by roughly 5 times. You can't see it very well, but on the blade on the left, there's a red hash mark, and our PLC basically replaces all of that, allowing for greater density and smaller size for the customers that use this product. We expect this product to sell especially well in Korea, where WD&PON is a standard that is used often. Google has formed a standard committee, a 10 by 10 gig standard committee. I'm proud to say we're on it. We have, if you move to the next page, we have sold, this is what we would really call an application that is short reach. It's for a data center. It takes 80 multiple fibers, combines them into one, goes into server racks. This is in a data center of one of the social media companies. There's 4 or 5 of them, and it's one of those. We've done over $1 million of this product in the last 6 months and expect it to be a nice growth area for us going forward that's outside of the traditional telecom market. As I mentioned earlier, we're going to expand our photodiode business into packaged photodiodes. In the past, we only sold photodiode die to other people that packaged them. We would sell the die for $100 or $200. They would package them and sell the packaged product for $1,500 or $1,600. We've got many areas where the customers would prefer we do the packaging and just sell them the packaged product. And we will, in March at the Optical Component Show in Southern California, be introducing a line of packaged photodiode products to expand this line. The line had been doing probably averaging $800,000 or $900,000 a quarter at a pretty good margin, and we think we can grow that business significantly over the next year or two as we move forward. The nice thing about the photodiode line in Zurich is it's very high-tech, provides us photodiodes internally that we can use for our products and allows us to sell them externally also, so it's very positive for us. Next application is non-telecom, and Matt can explain this in great detail. This basically is an application for facial recognition. It's one of the only products on the market that can actually identify a target in a place like an airport or a bank or at the border or somewhere else that's a moving object. Basically images their face using lasers. Our module that goes into the product basically measures the wavelengths coming back and interprets them and matches them against a database and identifies the target. We expect this to be a significant part of our business. This next year, I think we're going to sell 20 of these in January and probably several hundred next year. And if the application gets traction in the marketplace in 2013 and 14, the production forecast we've received from the customer, that's only a forecast at this point, would put this at the product line at very significant for us. In summary, although the market for PLC components has paused, and again, if you read the reports from Neophotonics or Finisar or JDS or any of them, they've seen the same thing. Part of it's inventory correction and part of it is softness in Europe. We expect that the market will return to growth. The feedback we've been getting from our customers in the last month shows that inventories have been depleted with large customers, and they're starting to order again. Our photodiode orders are back up off the bottom this quarter. So we think as we move into the new year, the business will return to growth again. We have significantly lowered our break-even, as you would have noted by the most recent quarter at $5.8 million of revenue. Our EBITDA loss was around $1 million. So if we can trend the business back up to 8.5 or 9 over the next several quarters, profitability will return. That doesn't count the JV. The JV allows us to enter the splitter market. If we hit the forecast for the JV next year, this time next year, the JV will be delivering significant EBITDA to the overall Enablement business. We continue to, I think the core of the company is the proprietary technology it has. I think applications like the defense one we found and the large NRE projects we do for large customers are the basis of the business going forward. We're aggressively moving into the 40 and 100 gig space. We're trying to build a non-telecom business, again, with NRE programs, and that's going well. And as I said, we've divested of the majority of our U.S. systems business and are currently negotiating to divest of the teledata business and hope to conclude that shortly. With that, I'll open it up for questions for Matt or Dave or I. Yeah.
What's the expected margin on the sale of splitters? Yeah.
It's very high, over 50%. Yeah, if it hits its forecast, it's wonderful. we obviously don't have high sales costs because we're selling to our partner. The manufacturing costs in the plant, one of the advantages we have is we were in the PLC business in Fremont. In the splitter business in Fremont years back. And we're paying $40,000 for a technician, $20 an hour, $22 an hour. The plant in Foshan City is paying $1.50. So from a labor standpoint, as much as we don't like it, we have exited the splitter business because we couldn't afford to be in it. Now we can at least do the design work. And the city's been extremely complimentary and positive for us there in helping us. And there are significant other subsidies if we're willing to put some design there and do other work in that part of the world. Having an anchor customer for a product line like this is great because the first 800, when we first started talking to Sensei a year ago, they thought they would consume 400,000 splitters a year. And I go every 90 days. Peter and I are going to the next board meeting. They bumped it to 550, and they just bumped it to 700. So, their consumption of splitters is increasing. Gives us an opportunity to use them as a base and then sell call it the spot market at even higher margins. So over time, in the not too distant future, the joint venture will be worth significantly more than the company's worth today, and that's reality. So we're very excited about it. I mean, it was fortuitous that we connected about 2 years ago at an optical component show in Los Angeles and put our technology with their needs. Other questions about that?
What is the biggest challenge you see that affects the bottom line, and what is the biggest opportunity you see affecting the bottom line?
The biggest challenge is the softness in the core. The Fremont business is AWGs, VOAs, and kind of standard telecommunications components that are used in systems. We have one large customer in that space that, in hindsight, was 25% of the business and went away, starting to come back. So we were narrow there. And that market's very competitive and it's softened. In the areas where we're building proprietary products, even in a rough market, they do well because nobody else can supply them. I mean, this defense application we're talking about, we're the only person that can supply that application. We actually designed it for them. Homeland Security is not going away, and we're rooting for the company to do well. And if it does, we're going to do well with it, and it'll be 10 or 20% of our business. Right now, the biggest challenge is the softness in the core business. The big opportunities are in order of how exciting they could be. I would say first is that the joint venture does better than we expect it to, because we've tried to be, because of my CFO, in our past, we've tried to be conservative. So our expectations around margins are lower than we expect to get, and our expectations around volumes were lower than we expected to get in our head. So that's the biggest opportunity short term. Second, I would think, is that the minimums we've identified for the NRE revenue, the minimums. So the way our most significant NRE project contract reads, once the design work's done and the product starts to ship, in year one they have to buy 2,000 units at $1,000 a piece, so $2 million worth of revenue. In the second year, they have to buy 2,000 units or $4 million worth of revenue. That's a minimum. They have to buy that to keep their exclusivity and so that we don't just sell it to everybody. If those are just minimums, and instead of being $2 million in the first year, it's 5 or 6 or 8 or 10. It's huge upside for us. So that we're also going to be assembling that unit in the Chinese joint venture. So that's the second large opportunity for us. The photodiode opportunity is solid, but it's going to be, an extra $100,000 or $200,000 a quarter over the next couple of years as opposed to a big hit. The defense application we've talked about has given us a forecast for several hundred units in 2012, 1,000 units in 2013, and 3,000 units in 2014. It's a forecast. It's not a purchase order, but if that were to happen, that would be a massive amount of revenue at a high margin. So those are probably the biggest opportunities. Down the list somewhere is that the core market comes back, which I think it will. But long term, our higher margin products are probably not going to be the products we're selling in Fremont today. So those are kind of rank order. Now the challenge is that we have sufficient cash to run the business, and we feel we do. So if we can divest cleanly of the teledata business, what I mean by cleanly is without it costing us a significant amount of money. Is that anyone? Any other questions? Yeah, go ahead.
No. Well, I have a question. Are there any questions that we should have asked and didn't ask?
Well, the big overhang on the company right now is the risk of the systems divestiture resulting in our exiting and costing us a lot of capital. And we are exiting it one way or the other, and we're working for that not to happen. And we're negotiating with a potential acquirer right now. So we're hopeful that we'll get that behind us, and we'll return to growth and profitability in 12. And, we, at $40 or $50 million with the joint venture, the company drops a significant amount of profit to the bottom line, and even a conservative multiple, we can return some significant shareholder value. And that's why we're here. That's what we're trying to do. That's what we're focused on. It's been a slog, but I think refocusing the company on its original core competencies going forward will produce a lot of value. So that's.
What is the timeline on that?
I hope to be standing here next year with a very profitable business.
So within a year is what you're saying?
The joint venture will start producing wafers this quarter, a few, have reasonably good volume every quarter, and step its way up till this quarter next year. It'll be at capacity, I think. Close to capacity. And at capacity, it'll drop a significant amount of EBITDA to the bottom line of Enablers. And will either, the core business, hopefully by then, will be back making a profit, and those two things together will yield a nicely profitable business within 4 quarters. I'm not saying it'll take that long to get profitable, but I'm saying by this time next year, I hope to be standing here with, a nicely profitable business. So, in 2012, and hopefully sooner rather than later. Any other questions? Okay, appreciate your time. Peter, I guess you have something you have to do here?
Well, I like the way Tim ended. He said he'd like to be standing here.
Well, I probably won't be standing here if it's
not
true.
You'd like to be standing here overseeing, that's number one, and number two, overseeing a profitable profitable business. And I hope both of those objectives are realized, and I hope we see you all next year and we're able to deliver on those commitments. Again, thank you for your participation today. Thank you for your questions and your interest. We're concluded.
No fun.